talking to Dan Walkow. We're talking about managing accounts, where you're a Canadian in the States or American in Canada, or you've got an IRA, an RSP, a 401k, a Canadian pension plan, an RIF, RESP, all that kind of thing, and then a cash account, just your stock market account. You live in one country, it's in the other country. Very few, like maybe 1 out of 1,000 stockbroker, money managers, whatever, can handle you in both countries. Dan Walkow, www.cbankcapital.com, is one of the people that can do it. Area code 866-541-9952. And back to Dan. Now, you were just talking about the fact that you can set up a domestic account in all 30 states, but there's a couple of states or something where you can't look after.
Well, yeah, there's just selected states because our business partners can't custodialize in those states.
Okay, so they haven't done the licensing of that part.
Yeah, and for whatever reason and so forth, but it's the vast majority of most states, whether it's New York, Florida, all the majors.
The ones where Canadians are usually.
Yeah, pretty much.
Okay.
Yeah, there's a couple of ones, but we, quite frankly, in the last 4 or 5 years, we haven't run across anybody we couldn't work with.
Okay.
So it's
well,
that's
the indication, and that's what I'm looking for. Let me ask you another question. Traditionally, up until now, your needs and the side to justify looking after an account, you needed a couple of $100,000 worth of investments.
Right.
But as well as doing the FX and making that possible at a much cheaper rate than most of the people out there. And again, I used the example in another segment today of where, for the sake, I'm just going to use, for the sake of argument, somebody's got $10,000 worth of stock, U.S. dollar stock, in their U.S. dollar account with one of the big 6 securities companies, and they sell their U.S. dollar things, and the securities company takes whatever the $10,000 is and converts it to Canadian dollars. So they charge a service fee for converting it to Canadian dollars, and then you want to take and buy $10,000 more worth of U.S. stock. So they take the 10,000 Canadian that they've done now, convert it back to U.S. dollars, and charge another 1.5% or 2% service fee for doing it. Same day. I've seen it the same day. Unfair, stupid, silly. There's no law that says they have to do it. It's just been something that they've... So you can see that if you trade $10,000 worth of stock 4 times in a U.S. dollar account,
it's a killer.
You can pay 10, 12, 14% service fees, plus the commissions you're paying, and you don't recognize it. And the only reason I figured out was because I see the slip that took it and said, here's what it is, and here's what it is in Canadian dollars. They're doing you a favor by giving it to you in Canadian dollars. But I didn't realize at the start that when they were doing that in Canadian dollars, they were actually, and the reason that I found that what was going wrong is because I have the Canadian dollar exchange, and my rate would always be a couple of % difference.
Yeah.
And I'd say, well, this figure's wrong.
Yeah.
It's not. That's not what it was. And I'd phone up and they say, well, that's what converted. We converted it. And then I'd say, well, wait a minute, but then you bought something else, you converted it back.
Yeah.
So they're taking $200 and $200 plus they got an $80 exchange.
Arguably, that's right. If you were to do the trade, say you were to sell the $20,000 worth of Apple and buy $20,000 worth of Microsoft, if you sell the Apple, they have your U.S. dollars.
Yeah.
Why don't they take those U.S. dollars
and buy
the Microsoft? No.
They don't do that.
They settle the Apple to Canadian dollars, take the exchange, the service fee, then back into again, so they nick you twice.
That's criminal.
Well, there's no law against it. It's standard practice.
Well, and you don't do that.
No, I mean, as I said, that's the beauty about what we do.
You don't do that in an RSP or anywhere else.
No, I mean, we have dual currency RSPs. I mean, certainly in larger amounts. We offer the wholesale, the FX at wholesale. So this is a big area, and when people talk about fees, I mean, I always get challenged when somebody calls up and they say, okay, Dan, we have $300,000 or $500,000, and so what are your fees? And I say 1.5%, which is our fee is 1.5%, a value of $2 million. And they say, wow, well, I have somebody doing it for well, they don't know in many cases. They say, are you negotiable? And I'll say, well, kind of account do you want? And say, well, we're a balanced investor. We like half in bonds and bond-type products and perhaps half in growth. And we want to have a mixture of Canadian and U.S. dollar assets. And I say, okay.
Okay, that'd be 2.5%.
Right. And then I say, well, they say, well, that's 1.5 seems awfully expensive. And I say, well, let me see. Let's, for 50, if you have whatever, $250,000 in bond products, chances are you paid between 2 and 3% markup on your bonds.
Yep. Because
you're retail.
Yep.
When you deal with us, you always deal at wholesale.
Yep.
So, for example, in bond trading and bond business, because we trade bonds at wholesale, we'll save the client anywhere between 100 to 500 basis points on a bond.
That's 1 to 5%.
Yeah, more double the actual coupon these days, because the bond business in the States and Canada, you can drive like the currency markets because bonds are inventory; they're not traded on an exchange. People don't understand this. Dealers have markups.
Yep.
The markup can be as much as 5% in a bond, and you don't even know it when you get your contract on the buy side. So I say to this fellow who is challenging me on the 1.5%, do you trade bonds at wholesale? Well, I don't know. I mean, the broker just does it. Right. Well, do you want me to show you what he's actually charged you? Do you convert currency? Well, yeah, occasionally. How many times do you buy U.S. stocks and stuff in your program? Well, occasionally. I said, do you pay service charges on your currency? Well, no. Well, I said, well, of course you do.
Yeah.
You just don't see it, right? So quickly, when from the value proposition of a 1.5% all in, you say, well, let's knock off 25 basis points for currency. Let's knock off another 25, 50 basis points for the bonds. Pretty soon you get down to well under 1% when you're comparing apples to apples, right? Mm-hmm. But it's a difficult concept to explain because, and the only way I can put it well, I guess, is to, say, yes, we charge 1.5%, but for that you get the privilege, the opportunity to buy and sell assets at wholesale prices versus retail. And that's the difference on the fee side, which it's interesting because they had a call the other day, and it was an issue about, I thought your 1.5% was a little expensive. And I said, well, let's see now, you own $600,000 worth of mutual funds. Do you know what you're paying for those mutual funds? Well, no, I don't pay anything.
2.5%, 3% likely.
Yeah, and so, but the internal more, I said, well, you're charged within the fund, and I think the average is, say, 2.8% for Canadian equity funds. So, you're paying, what, $20,000 odd in fees. You don't see it, right? So, but again, it's comparing apples and apples and oranges. But one of the things you asked about, and you've been on my case here for almost a year now about trying to do something for.
That's what I was getting around.
More of the let's say.
It's at least $25,000.
Right. So, what we've done, and we'll have probably be operational next month, is I think over the last year, for example, we've had a very good year in terms of investment returns from our investment style has managed to deliver for our growth accounts. Now, these are accounts where we have total discretion and typically are over $250,000. Our returns on the growth side have been 36% net of
36% doesn't matter much whether you charge 1.5%, does it? No.
That's net of fees. Our balanced accounts, which is typically half and half, 60-40 equities to fixed income, so that's the conservative ones, the ones we use for retireds and so forth, 30%, 29-ish in that area. So, so the problem we were having, as I've talked about, is that we need $250,000. Well, why do we need $250,000? It's because the client is responsible for paying cost of execution, which is buying and selling fees, right?
Yeah.
So we came up with a solution, which we've introduced 2 investment pools, which are going to be.
Let me just give us another little quick break, and it's time. We're going to just do a little quick segment because we're into 8:20 or something or other. So